Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Robert Collins, co-head of Private Wealth at Partners Group, to discuss developing investment products tailored to the needs of individual investors. Robert, it's great to have you with us. Welcome to Trade Talks.
Great to be here. Thank you, Jill.
Let's talk about access to private markets. How come it's historically been for institutional investors and not necessarily for retail?
Well, that's where the industry started. It was very much a cottage industry built for institutions, felt like foundations, endowments, public pension plans, corporate pension plans. So the products were designed for them, for those institutions that have significant resources in terms of investment staff. And over time, as the markets have grown, the products really didn't grow with the growth of the marketplace until relatively recently, in the past decade. And we're proud of our role in this. We created the first ever solution purpose-built for private wealth. And the sector's growing because the private markets are growing. If you just look at the number of private companies, for example, there are 87% of private companies with 100 million of revenues or more in the US are private companies. So now you're starting to see more products being built specifically addressing the needs of individual investors and some of those smaller institutional investors that don't have the resources available to them like the large ones.
Yeah, I could tell you over the past 3 to 4 years of my coverage, I don't remember covering this particular topic as much as we have been recently, particularly with what's happening in the macro environment in lending. What types of opportunities are solutions are available now for advisors to differentiate their portfolios?
Yeah, you've really seen a significant growth in these solutions the last 3 years in particular. So we've seen the same trend. And most of the products are representative of the size of the marketplace, meaning private equity is the largest part of the private markets. So if you look at the sheer number of products, most of them are focused on providing that core private equity exposure. So the trend there is for individual investors looking to diversify their public exposure, because again, public companies don't give you the full access to the economy. They're looking to diversify to that private company exposure. And now you're starting to see, the last few years in particular, further segmentation in terms of those products, covering different parts of the private markets, private real estate, for example, private credit, and really are offering individuals, financial advisors, the ability to have tailored solutions, whether you're looking for that total return experience like you would have with public equities, or if you're looking for a diversifying income type of return, such as you would get in a diversifying private credit type of solution. So there has been this veritable explosion, because it's been proven over the past 10, 15 years that you can provide access to the same assets, the same companies as these institutions have had, and you can do so in a format and a product structure that at the same time fits the needs and constraints and opportunities of those individual investors.
What does Partners Group offer specifically?
Yeah, so we created the first solution here for private wealth, really the first purpose-built solution for financial advisors, whether you're an independent financial advisor or working at a large bank or wirehouse, the first solution that works for them and their underlying clients. These solutions tend to look somewhat like a mutual fund. Our solution, for example, is in many respects a mutual fund. It's called a tender offer fund, and it is SEC regulated. So you see these regulated funds. They have elements of mutual funds, some elements of those traditional private funds, but importantly, they enable the advisors and the end investors to get immediately invested in a simple and effective way. So removing many of those constraints that make those traditional, institutionally oriented, somewhat archaic products inaccessible. Now we make this accessible.
So are they largely like closed-end funds? What do the liquidity profiles look like?
Yeah, they're commonly referred to as evergreen funds. And this is the key common denominator across all of these products, whether it's an equity solution or private real estate or credit, or even an infrastructure solution, which is really where some of the new product development activity is. So again, you can buy them on a regular basis. So on a monthly basis, you can actually buy units or shares in one of these funds, just as you would do with a traditional mutual fund. And that's an important distinction. So back to your initial question, thinking about those legacy institutionally oriented vehicles, they're not actually fully paid in investment vehicles. They're capital call drawdown type of funds, limited partnerships. Not really effective as it relates to individual investors who are looking to have that precise exposure at the time when they want to invest. So these solutions commonly are fully invested. You can purchase them. They come with many of the attributes that have been attractive in mutual funds, for example, 1099 reporting. So always being available, having tax reporting, performance reporting that investors are accustomed to seeing in their traditional investment portfolios is what many of these funds have.
Well, I mean, it's virtually impossible for a retail investor to replicate those portfolios, not from a capital perspective, but just to build that portfolio and pick and choose the assets. Are they liquid though? Let's say I want to take it out in 1 year, 3 years, 5 years. I want to move it to a different product.
Yep, so that's what's different. And now you can get that same institutional portfolio in a simple format that's built for you, the individual investor. So that's really the innovation in the past 10 or 15 years. And these funds typically do have some format of liquidity, some periodic liquidity to them. We can't be alchemists. So if you think about the underlying content, these are private companies. Right. So they're not available for purchase and sale on a instantaneous basis like you have with public securities, but there is a way to have periodic liquidity, for example, on a quarterly basis, with some limits to that liquidity, but you can provide some liquidity, provide that true institutional portfolio in a format, again, that makes sense for these individual investors.
And that's an important distinction to make because the underlying assets are not publicly traded where you can go into your account and boom, market order and it's available. So right. With that being said, why is advisor education so important given the retail demand in the private markets?
Yeah, for so many reasons. I mean, one, just to make everyone aware that the private markets have been growing. So again, back to the economy. If you look at the economy as a whole, most of it is in the private sphere, and I think we would all agree that it's beneficial for everyone to have the ability to get access to the real economy. Furthermore, some of the most promising businesses are private. They've been private, maybe never been public, or maybe they've tried the public markets and have gone private. So if you want to have access to the real economy, you have to look to these solutions. So that part of the education story is important. And then back to the product side, this is relatively new. So there's a fair amount of heterogeneity, lots of differences in some of these products. It isn't fully standardized as you would find in the traditional mutual fund space. So the advisor has an incredibly important role to play, incredible amount of value to add to these individual investors as it relates to the selection, the due diligence of these different solutions so that they can best access these parts of the market using these new evergreen funds.
So how does it work? Does an advisor go to Partners Group to buy these assets, or are they available in somewhat of an exchange format?
It's really through the advisor. I think if you were to look at how we are fitting into the marketplace and how many of our peers that have also joined this market recently are also doing it, it's through the advisor. The advisor has, again, an incredibly important role. We're not in the business of trying to find individual investors for these funds. We're really working with these financial advisors so that they have the right content, the right products available for them so that they can run their practice and serve the needs of those individual investors.
All right, Robert, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.